Alright, good morning. What I want to do this morning is a bit different. So I'm going to be picking just a few things to kind of like explain. If I begin, let's see. Let's get some more people here, but there's no, I don't know. Huh? If it's possible, we'll get more people. If it's not possible, at the best. Market structure. So I thought about it. I collated them. A lot of persons. I collated all their questions, confusions, and everything together. And after collecting them together, I put something up for them, and that is why we have the market structure session today. I'm kind of looking for something. Okay, I'm looking for a trade, but presently not seeing it. But then it's fine. Let's just go straight to what I want to do. For today, I don't know if my mic is audible. Please, if I am audible without any, what's it called now, you guys should let me know. Good morning to everyone. Let me know, please. I don't know from my own end here, so you can either drop a comment in the normal comment section, or you drop a comment in the live session. I'm looking at it just to confirm if it's if I'm audible well enough before I proceed. This session might be very long today, very long. I don't know when I'll finish. So I'm going to address the major structures of the market also I'm going to address we're going to backtest it, so that's why I said it might be long. So let me know, let me know if it's audible. I'm not seeing any comments, so I don't know if it's audible, if the mic is okay. Until I see it, if I continue, I need the feedback. Not seeing my comments. Did you make I just refreshed it or I reloaded it, so maybe if you made a comment before I won't see it. That's because I just refreshed the page, so maybe you should drop the comment again. I think I can see 28 people on the live session. You guys should drop one of you, I don't need 10 people. One person should make a comment that the mic is audible and clear enough so that I can proceed. I don't want to start and something stops me along the way, because as I'm starting now, I'm not stopping for anything. Okay. Sometimes you are wet earth. Thank you. The mic is audible. Yes, I good to go. Okay. But I'm also seeing the comment. But yes, I can see your. Are you seeing this? I can see it. Let us check your Telegram. Hey, this Wi-Fi wants to go. This is not too bad. We can use it. I don't want to use not too bad though. Let me check. Okay. Alright. Let's proceed. Got a new. Yeah. I got you. So we can go with it. So, so what we're going to do today, I'm going to be addressing key structures in the market, very important ones, and they look very normal, they're just normal structures, yeah. But then a lot of you kind of like, you don't focus on it, so you focus on too many things. I know a lot of things, so I'll just teach one. You know, when we're referring to market structure, so I'm referring to a market structure, This is a day. All these things I'm typing them down. I don't prepare anything down when I want to teach. I just start it. So when referring to market structure, yeah. First thing I want you to know, yeah. First thing I want you to know is that it simply means the structure of the market. There's no need to make the word too vague or too big and too hard to understand. It simply means what? Structure of the market. That's all. And then the structure of the market is categorized into just three. The structure of the market is categorized into how many? Three. Finish. The first one we have is uptrend. Yeah. The second one we have is downtrend. And then the last one we have. And the last one we have is a ranging market. RGIM. Ranging. This is what they used to teach you people for only God know how much, but then let's just do this. I want to quickly finish this today. So we have uptrend, we have downtrend, we have a ranging market. Now ranging market can also be referred to as a consolidation or a consolidating market or sideways. I will see the example in a moment. Now for uptrend, your uptrend moves this way. Why am I going back to this? Is because a lot of you are focused so much on liquidity that you forget the basics, and you will see what I'm going to do. So your uptrend goes this way, right? So it keeps on. I want you to focus on one thing I want to say. It keeps on breaking structure to the upside. That is what your uptrend will do. Alright? It keeps on breaking structure to the upside. Your downtrend keeps on breaking structure where? To the downside. Keep that in mind. So your downtrend keeps on breaking structure to the downside. And then the ranging market is a range, meaning it doesn't have a direction, and so it's going sideways. It's going sideways. Alright? So this is the three structures that we have in the market: the uptrend here, the downtrend here, and then the ranging market. This is it. Now we now have what I used to term as substructures, substructures, of which they define. Let me just pull it out. The substructures. So this substructure, so these substructures, then they define the movement in price, because price is not unidirectional. It doesn't go in one direction only. But one thing that price does in respect to others, in respect to any instrument, anywhere, anytime, is if it's going in an uptrend, it will have the time when it's pulling back. Listen, if it's going in an uptrend, it has a time when it's pulling back, and then it has a time when it's going in line with the trend. The pullback is what you refer to as pullbacks, right? Or retracements. When it's going in line with the trend, you refer to it as expansions. So that is when substructures come in. So the substructures, number one is we have the market structure shift, right? And the second one is, if there are more than this, I don't know them, but and the change of character in the market. Both of them, those are those substructures that I know. And those are the ones I'm going to be focused on this morning. Alright, so I've given you uptrend, downtrend. So let's pull out substructures. So for the market structure shifts, it means to shift the structure, meaning an uptrend. This is an uptrend example, right? A market structure shift would be to shift from up to down. Do you get? It means to shift from up to down. it means to shift from up to down with confirmations. Are you getting what I'm saying? With what now? Confirmations. So it means to shift from up, then shift down. That is a market structure shift. Now I want you to pay attention to something. In the market structure shift like this, let's take this one off. So this is the market structure shift, right? So the market structure shift like this, you see this break, meaning price in an uptrend scenario, price will break the structure low. It will break it, meaning this structure low must break structure itself. This is the structure that it must break. So it must break structure in line with the trend itself, and then price flips it, breaking the structure low and then breaking again. Mistake most of you do is when it breaks this first one, you call it market structure shift. No, it's always best for you to wait for the second break. After waiting for the second break, then you can call this. That is the only time you can call this a market structure shift. Do you get what I'm saying now? That's the one time you can then refer to this as a market structure shift. I think I should just do this so that it's large and so you can see it. Yes, I'm coming. So that's the one time you can refer to it as a market structure shift. After it does what? It breaks the structure for the second time. Do you get what I'm saying, right? After it breaks this one, so the second break. So when you see me talk about market second break of structure, this is what I'm referring to. I am telling you that you want to put your attention into confirmations rather than aggressive mode of trading. Like you're always trying to catch the top of the market or trying to tap the bottom of the market. You want to be smart. No, wait for a confirmation and then use risk management to engage with the market. And mind you, you can use it also in the lower time frame, given that you understand the order flow, which is the trend from the higher time frame. But I'll get there in a moment. Yeah, let's proceed. So this is the structure shift. Remember, don't forget this. Don't forget this. It is only called, I'm telling you now that you should refer to it as a market structure shift only after it breaks the second time. If you only after it breaks what this is the second break of structure. This is the second one here. So only after it breaks for the second time. So this is an uptrend scenario, right? This is uptrend changing to downtrend, and so meaning a downtrend changes an uptrend to be something like this. Let's just do it side by side. So it will be like this. So it shifts the first one like this, pulling it over like this, breaking this structure high. That's not when you call it a market structure shift, because it can as well just go down. So you wait for it to break for the second time. That is when you call it a market structure shift. Do you understand? I'm taking these things as slow as possible so that you get it. Good morning. So that you get it. So this is what you call this is what you refer to as the market structure shift. Why? Because of the confirmation break. If you don't see the confirmation break, don't refer to it as a market structure shift. Don't. So this is for market structure shifts. Then for change of character, they are almost similar but not the same. So for a change of character, right, in an uptrend, the change of character will be like this. So you see price go up like this in an uptrend, right, and then you see it have a failed break, meaning it will not break the structure to the upside, but instead go up, pause, then drop down. This is when you refer to it as a change in character. So I just call it a failed break. Some people also refer to it differently. That's why I'm telling you, okay, this is the way I trade it, so that we don't confuse ourselves, right? I don't want to go with okay how people see it. I'm going with how I see it. Alright, for context sake. So that's a change of character. So meaning up, down. Both. Okay, let's do down, up. So this is an example of a downtrend changing character to an uptrend. So what you notice is the failed break. It failed to break the structure down and then broke the structure against it. This is when you refer to it as a structure shift. Now mind you, once you understand, this is everything that you want to know. Let me put it in 8 hours so I can do this well. This is everything you want to know on market structure, to be honest with you. This is everything. Any other thing you want to know, it's left for you. Anything you want to now add to this is entries. Simple. And the entries here is, if we're going to be using market structure shift, it means you are going to be trading flip zones, obviously, because the uptrend changing to downtrend is a flip. The change of character is a flip, meaning you want to be trading flip zones. If you want to be trading, you want to be flip zones. So if you want to be trading in line with the trend, you want to trade the trend, meaning you want to be trading liquidities, meaning you'll be waiting for liquidity sweep. But let me give you an example and let me tell you how we are going to do this. Let's go straight to the market. Given that we've established that we have three kind of structures: uptrend, downtrend, and ranging market. Then the substructures, which is used for retracement, which is the market structure shift, which we use it to identify the end of a trend and the beginning of a new one, flip zone, and then the change of character. Usually the change of character most of the time doesn't lead to a change in the structure itself, so it's just temporal. It's not like a market structure shift. But we'll see examples. Let's go to maybe Euro USD. We'll stay with Euro USD. Okay, so we're going to stay with Euro USD for long. I'm going to take Euro USD back as far back as beginning of 2025, so that you see everything I'm trying to explain to you. So let's take it back. As I say, this session might be very long, so everybody has been asking me for session. This is it here. I'm not doing another one. So I'm going back as far back as 2025. I'm going to do it as the present day, and so you can also use this for any structure at all. Okay, now when you look at this structure right there in your screen, also you guys should also please confirm how clear is it over there on your side. I want to know, is it very clear? I don't know who is going to reply, Cletus, whoever. How clear is it? Hope it's clear, so I can adjust, either increase how clear it is. Which noise are you referring to now? It's clear. Somebody saying it's clear, and then Chris are saying it's not clear. Wait, let me just. Yes, it's definitely going to have the tiny hiss sound now, as long as you can hear my voice. Obviously it's going to have the hiss sound, like that shish sound. Let me increase this sim to 4000 kbs, 4000 kilobyte per second, I guess. Okay, hopefully it gets better, the visuals get better. Alright, so let's proceed. Now this is EuroUSD's chart from 2025, and we're going to deal with the structure itself, the way structure is. So look at what you have on your charts. What can you say about the structure? I said a uptrend will break the structure going up, a downtrend will break the structure going down. So let's annotate it. I'm not a big fan of annotations, but we're here, so let's annotate it. So this is a break to the downside, right? That is a structural low. This is a break to the downside, so obviously we know it's a downtrend. Alright, so let's proceed. So meaning if this is a downtrend, this is the structural low, this is a structural high. I'm not going to go into liquidity and those shenanigans yet, it's just structure, and I'm not going to POI yet. I just want to teach just structure. I'll teach this later. So after the break of structure here, what did price do? Pull back, because price is not unidirectional. It doesn't go in one direction only. When it goes in line with the trend, it will pull back to continue the trend. We want to then see, okay, what is price then doing? How is he even moving? So let's go to 4 hours, because this is the 8 hours time. So let's go to 4 hours. Now looking at this from the 4 hour time frame, right? So let's see, before price swept this liquidity here, what can you see to this side? You can see a break of structure, meaning if I were to bring our pathway out, right, instead of price coming down, what happened? It led to a change in character. Are you getting it now? It led to a change in character. I said the change in character is a failed break. So this is a change in character. The next thing it did was a pullback, and then moved on to the next draw liquidity. All this draw liquidity, all these shenanigans, I will attend to it, but not today. Let's focus on structure. And then after that, it went up like this, came down, went up. You see, it just continued in a trend. That's why I tell you a lot that 2 break of structures tells you your trend. You need just 2 break of structures to identify your present trend. So these 4 hours, maybe you're not going to see it very well, so I'll just break it down to 2 hours for you. So this is the break of structure here. We'll call this one a change of character. Let's increase the stuff. Let me say like 14. Yes, so that is visible. So we have a change of character here, and then another break of structure here. Alright, now normally if I use trade change of character, if I want to trade it now, I can just say, oh, there's a sweep of liquidity here, all those blah 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 blah, right? I'll just take a trade from this like this. I'll just take it, right? But we're not looking at that one now, we're looking at the structure itself, and how structure forms and the way it goes. After this move, this is too big, let's break it down. So maybe 11 is okay. After the change of character, price broke structure again. What do you see here again? It broke structure again, meaning it continued in an uptrend, and then boom, it shifted to the downtrend here. It shifted, right? It caused another change of character, meaning, see, this is a break, then it shifts, or let's just say a break. Let's stay with that, a break. Now this particular move is what majority, just want to put this as X, I don't, yeah, so this particular move is the one that majority of you just quickly call it a market structure shift. Well, no, you are wrong. You are supposed to wait, call it X, wait for it first to give you a second break, then you can now say this is a market structure shift. I don't know if I'm making any sense, because what do you see happen? if you say this is a market structure shift, normally you would just want to sell, right? So let's say this is a fair value gap, and you want to sell maybe from here, or you want to sell using the order block itself. What will happen? You hit stop loss, because see, it is not a confirmed structure. It's not like, okay, once you get the structure you will not hit stop loss. You would not hit, you would not take unnecessary losses, or how would I put it now? So let's go on. Price came down here, and then the next thing that price went on to doing is going against the break structure to the upside, meaning all of this was not a valid market structure shift. Price eventually broke structure to the upside before finally dropping again. After price dropped again, what do you see it does? A break of structure here. So we'll call this one X. We need a second one to confirm that it is now bearish. Mind you, this is the structure low that took price up, but if we have two break of structures before price takes out the structure low, the trend has shifted. So let's just put that in mind. So just drag it out. So the first break of structure is here, then the second break of structure is here. What do you think is going to happen? So to you that is focused on trading liquidity and all that without focusing on structure also, you'll be waiting that, okay, price will come and take liquidity and all. But what price is showing or telling you is that me, I've shifted though. I'm no longer in an uptrend, but now in a downtrend. Why? Because this was a pull-up, this was a break, right? And he gave another break. And what do we say? Two break of structures tells you your trend. So you have one, you have two. So any decision you want to make going forward from here should be what? Should be bearish. And so you see how price sold off. Okay, so let's just fast forward to the present place. Fast forward. Now this is a structure shift. So after price broke the structure downward here, the next thing that you see is a structure shift. So price breaks structure against, no, let's see, did it break structure against? Yeah, so it break structure against one, and it gave a confirmation to that. So this is a change of character, right? You call it a change of character, and also with the confirmation that it gave. So normally you're supposed to expect price to continue going up, but don't forget that I said the change of character is a temporal. It's not like a market structure shift. It's temporal, meaning price can change structure again anytime. So let's proceed. Now before price got here, it still broke structure here, one, and it broke structure here, two, meaning we're going to refer to this as a downtrend until it shifts, and then we refer to it differently. Why is it important that you understand how price is moving this way? So that you can make accurate decision in line with the trend. If you're trading flip zone, you trade your flip zone. If you're not trading flip zone, fine. So let's see what price does. You see it continues going down. So for you that say, oh, when you see a structure shift and this one you want to trade liquidity, if you took a trade from here now just like this, thank God all of you saw it, so it's not like we've done it before. If you took a trade here now and say, okay, you want to buy, let's see, because this is what majority you want to buy from here because you're trying to trade liquidity, you get stopped out. Why? Let me play it again. You rejected, but you get stopped out. Question is why? It's because you already have this break of structure here, one, and you have the confirmation of that structure here, two. That is all. So maybe you're not seeing it well, so I'll bring it up for you. A change of character, this, but instead of that it breaks again, one, and what? This is another change of character. So change of character, a change of character, then price continues a sell. So it's very tantamount. It's important that you understand structure itself. Alright, so we've entered 1025 now, so let's see how the structure continues to play out. Remember, we're in a downtrend now, and then price goes up, it takes this high. Mind you, you want to see what to do after taking this first one, because this is just one. So let's proceed. And then it continues, and then it breaks below, meaning it failed to break the high here. What do you call that? A structure shift, I guess you get that. Now mind you, that you mark this thing like this does not mean that, oh, every time you mark it that way, prices will respect what you are expecting. No. So for now, there's a structure shift. I say the structure shift is a temporal movement in price. It's not like a market structure shift that changes the structure from bearish to bullish or bullish to bearish. So here, the pending structure, or the structure before was a bearish move. We only have one break of structure. We cannot confirm, we cannot say it is now a bullish move until it breaks the second time, and we also cannot confirm if it's going to be bearish because it has not broken for the second time also. What do you do in this case? You wait for structure to play out, and then after waiting, you can make your decision. Now you can make a decision after price has done all of this, because this is now a second break confirming that price is still what? Bearish. So for now, you're going to be treating every movement as bearish. Anything you're going to do as bearish. If it pulls back, you're looking forward to take a bearish move until it gives you that same structure shift again. Then you say, oh no, let's now see, it's like price wants to do something different. Maybe flip to put it here. So now that you have, mind you, now you have a what? I don't think this should be hard for you to understand. A breakdown, and now a break up, change of character, then lead to the second break. So what should you continue doing now? You continue to buy. You now start buying. You start buying now. So price has responded off from these rejection blocks here, all these guys, and then now it's going up. So anything you want to do now, you start buying. Everything you want to do now, you start buying. Let's proceed. Let's see what this price is doing. You start buying, you start buying, you start buying, you start buying, until it gives you breaks that are not familiar with whatever you're doing. Now mind you, let's pause it. If you see this level here, it broke for the first time. Again, I told you I'm going to attend to liquidity later, not now. It broke for the first time here, but it did give us a second break. No. And that's why once you've confirmed the direction with that second break of structure, right, which is the second break of structure will either show you if we're in a market structure shift or a change of character. Or once you confirm the direction, everything you are doing is trade in line with that direction. So once we confirm that this was bullish, it went bullish for this long, it's still bullish until here. Now we now have a break of structure like this, because it's bullish. So this is a structure break, and then a pull against the structure low. Most of you would have termed this as a market structure shift. No, you wait, let it break for the second time before you say, oh yes, it's now a confirm market, because price can easily just mitigate this fair value gap and start going in its way again. So you wait for the second break of structure, let it do what it wants to do, and then you can make that decision. So let's see what it does in this level. And then it gives a second break of structure here. So now that it has given us a second break of structure here, right, this is when you will now refer to this as a market structure shift, because it has given you what you need. Too big. Okay, then okay, so you refer to this as a market structure shift. So for now, until proven otherwise, you start selling. I see that price has respected this fair value gap here, but let's just see what it does. You start selling until it breaks for the second time, opposite. So price falls downward from here, but let's not rush it. I don't want to take it too fast. so that you see follow. So from here, where the market structure shift occurred, you then had this second break, confirming what the market structure shift, for God's sake. After this, the only thing you want to focus on doing is what? On selling, because that is what the structure is saying now. Mind you, our address, what they call it, POIs and liquidity some other time. Let's just focus on structure. So now, after this whole dump, price did what here? Broke again. So it did not, mind you, this is it though, it did not break. After breaking structure, instead of it to break down, it broke against. What do you call this? A change in character. But what you are waiting for is, if it will break again for the second time to this opposite side, then you start treating it as a what? As an uptrend. For now, it is still a downtrend. Let's proceed and let's see what price will do. Okay, I feel like that's even breaking for the second time, but let's see. Okay, all right, good. If you look at this now, you then have he broke this place. This place is small to me. It's not really valid that much, but let's just classify it, because if you go to, let's go to 1 hour, so that we'll see that break very well. I don't like as it's like that, but in 1 hour it's a break of structure. Okay, so if you treated this as a bullish move, and maybe you took let's say you now took a buy because of this, maybe because of mitigation of this fair value here, whatever, right? And you take a loss, that will be like your first loss. Because me, I'm not trying to show you that, oh, if you are trying to do this, you then become invincible. No, it's to mitigate your losses while you understand structure. So now you now have a market structure shift, right? Because you have this break a structure, and then it pulls down, breaking the structure low and giving you a second break, which is the confirmation break. So then you can call this a market structure shift. Why? Because it has a confirmation break. This is not hard, but then you complicate everything so much because of, I don't know why, but then let's just proceed. So we now have a second break, and we can now start looking forward to what? Selling. So anything you are going to be doing from here should be sales until it gives us that two break of structure again in the opposite direction. We have 1, we have 2. It just, you see it now. So we have, hold on, we have this one, because it is a failed break here. So a change of character. This is a change of character, right? This is a change of character. It refused to break the structure low, and then going up here, it broke this. So what do you think we're going to be doing now? We're going to focus on buying and buying alone, of which it has even bought. It has swept liquidity here and all the things it wants to do. But let's just see, it's supposed to continue buying, just continue buying, just continue buying until it shifts structure again. So we're in February now. Price has already even shifted. I don't know if you are seeing this, but so this is a structure low now here. There's the reason why I'm using 2 hours, because it cuts out the noise and all those things. So 2 hours is usually for POI. Write this on the follow me. So let's proceed. Now you have 1 break of structure to the downside, meaning this is the structure low, the structure low here. This is the last place that really gave us a break of structure that went up when it broke this structure here like this, right? So next we had another break of structure like this. So this is 1, let's call it as 1, and then the second one is here. Now before I continue, let me address break of structures. There's a way I identify break of structures, and it's this. Okay, there's a way I identify break of structures, right? And it's not normal way you're going to call it. I will always tell you that a break of structure is one that has space in it. You see, when you hear space, you be like, "Look, what am I even referring to?" This space, you see this gap inside where is this thing? You see this gap inside it. That is what I'm referring to. So you see this gap inside it. This is what I'm referring to. So when you cannot see the break, or when you cannot see that break, it's not a valid break of structure to me, whether you like it or not, or the best. That is why you did not see me marking this one, because I cannot see the gap in it. The candles are too close. But if you see, I marked this one. Why did I mark it? I marked it because it has a gap. I marked this one, why? Because it has a gap also. So that is the confirmed break of structure. Do you get? Let's go let's go back to the subject topic. So now my leg don't pay me. So now let's proceed, right? We have this. Now we're going to focus on what? Bearish move. Why? Because the structure is now bearish. You focus on what again? Bearish move, because the structure is now bearish. Let's proceed. Okay, price goes up and it clears all that liquidity. If we look at taking sales, we will take another loss. Mind you, you know how many buys you'd have taken in all this place, or even holding a buy. So if you take a loss, it's not the end. You are not going to die. It just shows you how probabilistic this whole thing is. But the focus is on what? On structure. Because none of us controls the market, but you need to have an accurate understanding, or at least an understanding that will help you in the market. So now you have this break of structure. I'll just call this one two breaks because it broke this and it broke this. So we're supposed to look at price continuing to break structure to the upside, except it wants to range it to break structure to the downside. So let's see how it's going to go. So it breaks structure to the upside there before falling down. But let's confirm that first. This thing is gone. So did it break structure to the upside here? Did it sweep this place off? It did. So it took that place off there. Now I need to be accurate. I need it to be as accurate as possible here. So that's the external range liquidity, right? So after breaking this and this, the next decision we want to make, the next very decision we're making is to what? Is to buy. And so you have your buy in this level. I'm not going to talk about POIs today. I just want us to focus on structure. So after the first confirmation break, the first break, second break is to buy and price bought. Now price failed again, meaning it's trying to go bearish now. Alright, so you have this break of structure here, you have this break of structure here, whereas we can refer to this as a what? Let's do it again now. So you see this, right? So it came down here, gave a little gap before pulling down, right? Before pulling down, I can even call this one, so pulling down. So what do you think it is now doing? It is now bearish. This is why I always emphasize on double breaker structures, double breaker structures, two breaker structures. I always emphasize on it. Why? Because honestly, it is really all that you need, to be honest. Really, it's really all that you need when we're talking about all these things. But let's proceed. Okay, let's proceed. So after this, I want to see what price is going to do next. It's supposed to continue and trade up and then before trading down. Okay, good. Then you have a break here, a second break here. So everything price is supposed to do from here is to what? Continue to buy. Where is it safe? Let's see how far it has gone. With the first break, this break of structure, now you can call this one exchange in character, right? Because it refused to break structure to the downside, it broke it to the upside, and that is a change in character. First break, confirmed break or second break. So anything that price is going to do is to continue going what up, and you can see how far it has gone up. Alright, you can see how far it has gone up. So price, all this one now, price will find a way to drop down to it. Alright, now look at something here. I want you to pay attention to this. So this also looks like a break, and price swept it here like a liquidity. But do you see a second break there? No, it continued going up. So until he breaks the structure and gives us two breaks in a particular direction, we would not change our bias. Let's continue. So it continues to break the structure to the upside. Oh no. So it does something like a flip here now. Although you might not see it like, oh, it's not really clear, but here, but I need the second one to make a decision because we're still in the uptrend. Alright, we're still in the uptrend. Alright, you see what's going on. It continued, it broke the structure. Okay, beautiful. So here is where we saw last. You can see it took out this high here, right? After taking out this high, what do you see price do? It dropped down here. That's one. It dropped down for the second time. That's two. Everything you're supposed to look out for now is to be what? To be bearish. If it continues going up, no problem. But now, all bearish move. You can see how long it has gone down. So when I get to entries, as it has broken structure 1 now, it has broken this structure here, but we're not going to take it as any confirmations yet because we want to see if it breaks again for the second time, which is this one. That's why most of the time when you join the live stream, I'll tell you we're waiting for a second break or this is the reason. So if you're not getting this, if you miss it here, a lot. So this can be a liquidity sweep or it breaks the structure. But let's see, the structure is still down. Good. Now it breaks structure to the upside. What are we expecting from here? To continue going up. If it doesn't go up and it comes down, you are wrong for the first time in the whole month of March. This is the month of March. For the first time, you are wrong with the first time in the whole month of March. So let's see how it goes. And then it goes, and it continues going up. After this two breaker structure, and then boom, up it goes, and it goes up, right? It goes up, and let's see how it continues. So this is April now. Now price has broken structure once now here in this April low. Price has broken the structure now. Let's see, will it break this structure? If it doesn't, it's supposed to continue going up. So now we have this break and we have this breaker structure. Alright, so from here we expect price to just go up. That is what we expect. We expect it to just continue going up until it does something otherwise. So we have the structure high, structure low. Price is just trading here, trying to find a new high and a new low. So it breaks up again. So it continues the trend. Upwards. So we now have a first break. We have a first break here. But we want to see, will it break this second time? If it breaks with the second time, you already know what we're now expecting. We will then be expecting it to continue going way down. If it doesn't, we'll go up. Already we have one break already too. I want to show you. No, you chill, Jerry. Already we have one break already here too. But they didn't break for the second time here. No, it did not. And so it broke downwards. And so you know what we're going to do. Continue the sale. This is just how structure works. So It's like, which month is this? This is month of March. It looks very choppy. So this is the break. We're in the downtrend. Everything you're expecting is supposed to continue going where? Down. So you give the break there, but no second break. The only time we change this uptrend to downtrend to uptrend is when it breaks this structure for the second time. So let's say it breaks structure to the downside to continue the downtrend that has been established already. That's the point. So it continues it by May now. Now it breaks structure here, because I can see it breaks the structure here. We've been down, we've been selling since. So how many times now have you been wrong? I don't think you've been wrong in the direction for the past 2 months now. But let's see, we need to be wrong at least once, so that it makes sense. So I think this one, hold on no. So this one here, it breaks the structure down, yes, and then it fell down again to break the structure. So we would have been looking forward to selling, then unfortunately it flips to buy. So we're wrong here. Now that it has flipped to buy, right? Now it has flipped to buy, we start looking forward to what? To buying. Alright? Simple as ABC. You know, pass like that. Simple as ABC. Like this. That is it though. Simple as ABC. I want to even pause this first. So if you look at this now, as price continue to buy there, right? You can see, you'll notice this break of structure to the downside here. This is me. By God's grace, I will finish this thing. I don't care even if it's only one person that is left. I will finish it though. If it's only one person that watch it, no problem. I'll now finish it. So we have the structure right here. So what should come into your mind? Oh, we want to sell, but no, not yet. Why? Because I already defined what the valid break of structure is to you. We want to see a space. So this move here, I would not really classify this move as a second break, although yes, it falls on that, because if you go lower we'll see the second break of structure there, right? But I wouldn't. Why? Because I need to see a valid break. That is why I am patient. Now this one, I can use it. So it's just like the one we used before, similar. This is why they say sometimes price is also something similar. So from here, after giving me the second one that I've just annotated, I should expect to see more bearish move. So let's see what it does. And then boom, it goes up, but boom, and then it continues. So for here now, I'm going to be wrong. Alright, now this is one thing that you don't really see. You know, I was opportune one day to see a session like that with one of these mentors, and in your backtesting sessions, in your session, there was no wrong move. I need you to understand. You see, I can do all these things and cut away those wrong moves and show you that it's perfect, but no, I need you to understand that even as you are trading and even as you are annotating, you're trying to fix your direction, you will be wrong, but not all the time. I can promise you, most of the time, at least 80% to 90% of the time, you're going to be right when it comes to your direction. As long as you're going to listen to this, you will not have any issue with direction again. You see that with that two break of structures, because focusing on that two break of structure, I have encapsulated the concept of market structure shift in it. I've encapsulated the concept of change of character in it. I have encapsulated the concept of trend, which is uptrend, downtrend, what you now call maybe ERL to IRL, IRL to ERL. I've encapsulated the concept of what's it called now, any way you want to put it to identify your direction is all inside. Why do I say that? For example, using this one as an example, right? When we confirm that it was uptrend here for bullish here, so one break, second break, all right? If we were to do it, I want to annotate it properly, say okay, what is now this particular move? Yeah, now this is a one move downward. This move up now, what is it going to be called? A change of character, obviously. But with the second break of structure concept I'm teaching you now, it becomes easy. You just know, okay, yes, price has already shifted because it came down and it broke again. So this one you will now term as a change of character, and the confirmation break. It's just like that. So if I come, let me take this one off. So it's just like, okay, I come here, I show you that this is a break, right? And then this is a structural low, mind you, this is a structural low, and then price falls down, but it didn't fall down like that. It came down and then did this, and then it broke downwards without breaking the structure up. This is a what? A change of character. So it has encapsulated all those concepts together. Now this one going up like this, is this on a change of character? No, this is a market structure shift. Why? Because is breaking the structure that fell it down, which is the origin of this break of structure. This is the origin. This one is the origin of the break of structure here. It took it out here, it stopped here, pull back, gave us a confirmation. What did I told you, you should remember from the beginning of the session, I said wait for the second break of structure. When you are referring to the structure shift, market structure shift, you can only identify it when you wait for the second break. So you then now see why I used to say second break of structure, second break of structure. All these things that we're annotating, I will then come back to it. That's why I say this session might be long. I'll come back to it, and then we will now see how we use POIs with it. If you trade just support and resistance, if you trade just liquidity concepts, you will see it. We're in June now, so we have December to go. So let's take this one off and continue. So we have a break here. This is a break of structure here, first one, and the second break of structure here. So anything that's going to continue, we expect to see it going up. That is all. If it breaks below, fine, but we're expecting to see it going up. Now we have one break. This is what I'm saying, right? So if we say we expect to see it up, have you seen now that it went up, right? Now we have a break of structure here. We're still treating it as an uptrend until it changes. So here, if it breaks downward, you see, I've not even gone to another time frame to say, oh, let's check multiple. I'm only on 2 hours. So the same way we're annotating this in 2 hours, you can be annotating it in 1 hour. I don't say minute time frame, because if you use something like this in the minute time frame, it will work, but it's full of so many candles, wicks, and all those things. You make mistakes, and that's why I'm using 2 hours, 4 hours as an example. So if it breaks to the downside now, it shifts the structure, but we're still an uptrend until proven otherwise. So let's see what it does. And then it continues the trend, as simple as that. It continues the trend, as simple as that. Okay, now it breaks structure twice here. This one is a structure in 1 hour. Let me show you so that you see what I'm saying. I know I can see it, but you might not see it. So this is structure in 1 hour. So it looks like he swept it, right? And then it breaks the structure up like this. Before you know it, it fell back. But treating price as a going concern, so it fell back, it broke the structure. Now breaking the structure. Let's see if it breaks here, we'll start treating it as a what? As a bearish move. Alright, it breaks it. So everything that should proceed from here should be bearish. It can change to be bullish, no problem, but it's supposed to be bearish. So it changes, and we have a bullish move here. So break of structure 1, what is this? A wolf. So break of structure 1 here, break of structure 2 here, continue going up. So anything you're going to be doing from here, from the second break up, we're going to focus on what? On bullish moves and bullish moves alone. So my pullback, my sweep, my do all of the bullish move alone. until you see that second break of structure. Alright, okay, I want you to pay attention to this one, very very important. So you see this break, right, and you see this break here. How many is that? 2. So why someone else is saying, oh, the trend is still bullish, but the trend has showed you that it's now bearish? So what are you going to be doing now? You're going to be selling. You're going to be what? Selling. And then you sold, taking out the ERL, which is the external liquidity, which you refer to as the sell side liquidity. Okay, any name you want to call it, I know it, so don't worry. So and then it continues. So it's supposed to continue going down. It's supposed to continue going down. And then it continues going down, right? So until it shifts again before we change our structure. If you notice, it wanted to here. So if you notice here, it wanted to shift, but did it give you a second break above? No, it continued. So we'll continue taking a sell until proven otherwise. And now we're in July, so it keeps on going like that. Structure breakdown. Okay, this is a very sharp move up. So this should be news, if I'm not wrong. One of those crazy news, right? So this breaks downwards here, but it breaks here, so we don't have like second break. So it breaks here, no second break of structure, none. So we're not going to treat it as a second break of structure yet, right? We're not going to treat it as a second break. We're still going to treat it in line with the trend, meaning the direction is still what? Bearish, until what's proven otherwise, until you then have a second break to the opposite side. This will save you a lot of rubbish. So let's see what it's going to do. If it breaks up, oh bro, beautiful. Before I even talk, let's tell you the break up. So we have this break here, yeah, then we have this break here. Anything that proceeds from here should continue going up. So you wait for a pullback, anything just continue going up until proven otherwise. So we have, you see what's going on now, right? So you have this break here, 1, you have this break here, 2. So anything that should happen from here should be going where? Down. It should just continue going down and down and down. Just keep on falling until this one is enough. It's supposed to go up now. There's a way market to expand, you know. It don't do start going up. So it should start going, we don't know yet until we give a confirmation. We're not sentimental about it. So the confirmation has to be this break above this high, right? Alright, so let's see, boom. So start going way up. It will retrace, but start going up. From here it should go down. You know why? Because we now have this break of structure here and this break of structure here. So you took a buy, maybe you're trying to take a buy from, I can already see liquidity people trying to take a buy from here. Even myself, I join for the liquidity people, right? But I'm seeing 2 break of structures here already. Meaning anything I want to do now, I've flipped it to be sales. It might flip to be a buy, but there's no problem. I should look at sales. Okay, if it got, it continues to buy. So you see it now, that the times you're going to be wrong compared to the times you're going to be right, there's a very big difference. So from here, what we see is price has shifted the structure, confirm the shift in the structure, and we should continue going up. If it keeps on shifting the structure, shifting over and over again, then you now know it is ranging, it's not trending. That moment you just know that, oh no, this one is a ranging market. So this one now, if you zoom out, it looks like it's staying in one direction, this low to this high. Do you get it? Because why do I say this now? Because it's breaking the structures in opposite directions over and over again. if you look at this now, it came down here, one, came down here again, two, and shifted it again upwards. And that's what it has been doing here. It started doing it here. So it is kind of like ranging. It won't happen all the time, but it will happen. And so now it has broken the structure for the first time. So wait for the second break before we can then confirm that yes, it is now bullish. But for now, you sit out. You sit out of the market, and then it breaks again downwards. So from here we can say, oh, let's now start going down. We have one already. If it breaks for the second time, just know that this is the kind of market that I'm telling you that is ranging. Boom, it breaks for the second time. So use your eyes and look at it. So you should see you should see how clear it is now that is ranging. So most of the time when you keep on taking a particular loss, you are taking loss over and over again, it's because you are not paying attention to this thing. See how long that we have been trending. We've been in a trending market since January that we started, which we saw it when it trended up. We've done a lot of I don't even know. We saw it when it trended up, when it ended the trend changed down like that, and now we see just changing the structure, changing up and down. You'll be wise enough to know that this one is ranging, no, this one is not trending, no. Until there's a proper breakout now, we're not going to do anything. After identifying the range, yeah, so identify the range until it breaks off, and it gives us one, and it gives us second one there. So from now we'll be what? Bullish. From here we're supposed to be bullish. From here it's supposed to continue going up. Why? Because let me show you. So it broke out from the range here, one, and it gave a confirmation here, two. Alright, oh, let's just put it this way. It broke out one, sorry, it broke low, sorry, I say broke out. You have this move as one, okay, no confirmation, and then it fall down, one, two, here. So to tell you that sometimes if we can make mistake, I make mistakes too now. So here you have second break. So from here I supposed to be expecting bearish move, having in mind I know that it has broken out from a range, and most likely it's supposed to continue up, but I am focused on two breaker structures, nothing less, nothing more. Anything that it does, fine, but then as it shifted like this, I might take a loss. I will take a loss when it does this, because I'm focused on taking sales now, but eventually it flips and it gives me a second break here like this. So now our intentions will be to what? To buy. Alright, so let's see what it does from here. Our intention should be to buy, continue to buy up from there. Why is it stopped? Okay, I paused it by mistake. So our intention is to buy, to continue to buy from there. Oh no, we have only one confirmed move here. Oh no, another one here. So although this looks very much like a buy from here, outer structure, but that's why I don't just used to treat one candle like that. That's why I'm coming to POIs. Don't worry, let's focus on structure itself. From here, let's see if it's going to continue to sell. If it's supposed to continue to sell low, but it will buy because it's expecting it bought here because it was respecting the higher time frame POI. That's why we'll come to POIs. Now I want you to pay attention to this. Pay attention to this. If we went to the 4-hour time frame, this move here, you'll be like, oh no, this is supposed to buy from here. Why? Because it's a higher time frame key level. When you fall down to 2 hours, the same thing. But with what I've been telling you about the two breaker structures, you already have something in mind that is going to happen. You have first break, you have second break. Anything when it pull back, anything that's supposed to happen should be what? Should be a sell. So what do you see price do? It goes up. So everyone in mind now, they have it in mind that, oh no, we're going to sell, we're going to buy, or we are holding a buy, we're holding a buy. and then suddenly it flips on them, and then suddenly now yes, everybody's seeing is a sale, is a sale. I'll be like, how did it happen? It's because of the second break that I'm telling you about, because majority do not like to pay attention to it. People don't want to pay attention to things that give confirmation. Everybody wants to trade aggressively. So now it has given us, it has confirmed that sell, and then it's selling. That's the thing. It's selling. That's what I want you to know. That now it's sold off. Alright? Until it gives us the 2 break again to the upside. Then we'll not change our direction from bearish towards to bullish. So let's see what happens as we proceed. Now we're already in October. Alright, we've tried this morning. We are backtesting the data from January to October. For those of you that have been saying you will backtest, you see it's not easy. You see how easy it is. At least I'm doing with you. If I was doing it alone, I would have been done, because I know what I'm looking for. So now we have 2 breaks. This is break 1, break 2. So I should expect it to continue to go up. This even looks like so many liquidity pool, but I should expect it to go up from here. So even if it sells from here, no problem. Me being wrong few times is not bad, but it should go up from here. That's what I'm expecting. Like I said, this looks like a liquidity pool, and then breaks for the second time. This is beautiful, clean. This is clean break. So we have 1 break here, second break here. Anything that proceeds from here, anything that you want to see from here, should continue going down until proven otherwise. Alright, so every pullback you're trying to trade, you're going to trade it as a bearish move. Everyone. Okay, so now we have price breaking the structure here. But did it break the structure here? It failed to break the structure here, whereby it went up and broke the structure. Sorry, so it went up here to break the structure. What do you use to refer to this again? Is a change of character. So now I'm saying, okay, will it break the structure for the second time? Obviously we're waiting, and then boom, it goes. So from here we're going to treat it as an uptrend. For those ones that are just joining us, it is market structure. We started with few things. Number 1 is we have basic structures in the market, which is uptrend, downtrend, and consolidating, which is the ranging markets. And thank God we'll be using Euro USD. We've seen when the trend was uptrend, we've seen when the trend was downtrend, and we've seen when it was ranging. We also looked at the substructures, which are market structure shifts and change of character, and then I encapsulate all of that into one concept that points out everything. The 2 break structure. You can easily tell your trend and know what you are trading. So identify your directional bias. Alright, to proceed, right now we have this break here, we're supposed to continue going up. But now we have a break in this low, which is the main low itself. Okay, we have a break here. So if it does a second break of structure, we're going to change our bias from bullish to bearish. It does it there, it does it here. So I'll change my bias to bearish now. So my bias should be bearish until proven otherwise. If it breaks against it 1, I need the second one 2. So now our bias will be bullish from here. Anything that I'm going to be doing will be to buy. So 1, 2. So from here, anything I'm doing will be to buy. If price pulls back, maybe I'm trading liquidity concept, whatever concept I'm trading, it should be to buy. If I'm wrong, then it's not bad to be wrong. Like now, we're wrong here. I'm wrong here again, right? So hold on. So price breaks here 1. So price breaks here 1, and then while waiting, it breaks again for the second time here 2. So what are we expecting from here? To continue to sell. Okay, so it continues to sell, So if you are going to be wrong, you won't be wrong all the time. You won't. So he's continuing to sell until proven otherwise. We now have one break opposite this one, and you are going to treat it as a market structure shift, yes, but we need a confirmation, which is I need price to give me a second break of structure. He did it, and so from here I should expect price to continue to buy. Oh, we're already in November, Seth. Continue to buy from here. So even if he sells and we're wrong, it still doesn't justify that, oh, this thing is wrong, you cannot use it. You see how effective it is. You easily understand your structure now. So you should continue to buy from here. Given that you have 1, 2, price will continue to buy anything you want to do until it shifts. Like I can see a shift again, so let me show you. So if you look to this side here, you can see the first break, and look to this side here, I can see the second break. So if you fall down to 1 hour, maybe you see clearly. I see it now. So you can see this break, see this break. So anything I'm looking forward to now is sell. So another person can be somewhere and say no, it's supposed to buy, but no problem, this should be sell. Anything that, if I'm wrong, no problem. You get what I'm saying? So let's just go on. Okay, now I can see, oh, it didn't break the second time. Hold on. And so price break structure, boom, it breaks the structure against it here. So one, so what we're going to be waiting for a second break so that we can then change our direction, and then it does it there. So anything I'm going to be doing from here after it breaks for the second time here, I'll be looking forward to what? To buy. You're right. Anything at all, if he pulls back, I buy it until he gives me that. You get, until, see this one now, see this one, you see he broke structure here, right? But did he break the structure for the second time to the downside? That's the answer, no. And so that's why the structure still holds, that we're still going to buy. So until it shifts, no buying, I mean no selling rather, it will just continue to buy, and now we're in December. It has broken structure for the first time now. Maybe I'm not saying it, so let me just pull it out for you. So it broke structure here 1, and broke structure here 2. So what I'll be expecting is that price should what? Sell. So even if price now buys, if we are wrong, it's not bad, because how many times you want to be right? Are you a criminal? So it's supposed to sell, so 1, 2, trend is to sell, and then boom, it goes out, and it sold. It did not sell 1, 2 from here, it sold now. So if anything you're doing, you would have even been out of the market, but it sold before even eventually shifting. And then now the price has shifted, you have 1, so wait for the second one. There's no even need to wait for the second one in this case. If you can see that it has gone up, so anything you're going to do is to just be buying from here until I think it's real, what's his name, you see, until, so it's going to buy until it shifts this level. Okay, but yeah, you see, this is why we wait for the second break of structure. The idiot refused to buy and refused to sell because he didn't break that structure there. So he broke the structure here 1, he broke the structure here 2. You might not see it, but let me show you. I'll show you 1 hour. So yeah, so he broke the structure here 2. Okay, so we're supposed to see a buy from there. What's going on? I'm getting a very funny sound. I hope that sound is not entering this place. Hold on. Whatever. So for you, this was when the year was ending, so this is 2025 ending. Proceed. Already it's even selling. Let me take it back so you see what I'm saying. From here, right, price goes up and then breaks down. Count it as 1. So if it breaks down again, 2, right, of which it did here, and so we're supposed to see it as what? Sell. From here it's supposed to just continue selling downwards, but let's just see what it does. So it sold. This looks like liquidity sweep, so plenty liquidity, but it sold. It's continue selling until proven otherwise, and then now we're in 2026. Today is what? 10. So today's 10th. So you see it going down. Why? Because the structure is still down. We don't have a second break of structure yet to the upside. So this is where price closed at, and this is where, so everything that you would have been doing is to hold the sell, continue to take sells when with your confirmations until we get here. For those that are just joining, you look at it now. We have done directional bias. Explaining structures from January. See, we've done the whole data from the whole of 2025 till date, and we did it under how many hours? So how many hours have we been here? To tell you that it has to take you being intentional to see certain changes in things that you are doing. It's not my own it's not my prerogative to tell you, okay, this is how you should study or this is how you should not study, right? No, it's left with you. It's left to you. Anyhow you want to do it, you do it. You get anyhow you want to, you do it. Let me check if there are questions. If there are questions this time we send them so that I then down, we should be down Nepa. This guy. Okay, so no questions here. So if there are questions, you drop the questions just in case there are questions too. It's like they took your own like junior deals. This man. So let's go on. I want to then show you how, but this is why I said it might be long. So we started with identifying the structure, and our price respected each and every one of those structures. Next thing we want to do now is to identify it with POIs, and we'll use both order block and fair value gaps in line with that structure to say, okay, this is how price is respecting it, this is how price is respecting it. Every of those structures, okay? Where you did? So let's go far back, far away, far away, far away, far away. I think this is it, yeah. So I'm showing you this. Da, 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 da. So if you trade order blocks, rejection blocks, whatever you trade, right, moves like this. So for example, this is our time frame, right? This is a rejection block. This kind of move now, you miss it. There's no need to tell me that, oh, you cut this. No, you miss this one. The only reason why you miss it, or the reason why you think that you did not, you miss this one neat. Why? Because this is a rejection block here. This is a rejection block. But I can tell you, no, it's not just rejection, because it also has a fair value gap. See, this is a gap here, right? This is a fair value gap here, okay? Like this. This is a fair value gap. This is where you be drawing on fair value gap, but not the way I used to draw. You now see the reason why I used to draw using the whole the whole second candle. And so price respects this. Let's take note of it, to just be taking notes. So price respects this. So when it was confirmed that it was bullish, what do you see price do from there? Let's see it now. Thank God that's why we're here now. So let's see. Price comes down. Okay, this is not a fair value here. This is not a fair value. The fair value is here. So at the end of the day, she respected the whole fair value coming to the consequent temperature report. It respected its needs. Alright. So whatever you are trading, as long as you've already gotten that directional bias, just the way I've showed you now, the rest is history. The rest is history. So let's just proceed to what you're going to be seeing. This is another block here, and so price comes down, trade into the other block, you take a continuation. This is when the market flipped. So you have 1 here, you have 2 here. And price was respected the fair value gap here. Okay, price respected fair value gap. So we're going to be I'm not going to be putting position 2 because some people like, oh no, you can't be right all this time or you can't be wrong all this time. No, concern me. I'll not put position 2. I'm just showing you with respect to POIs, because some of you, when you're backtesting, you are quick to put your position 2. I got this, I bought this, and so it will be suiting you as the price is moving your position 2 to profit. When it's moving your position 2 to loss, you carry your eyes away, be like, oh no, don't hit stop loss, don't hit loss. You are a winch. So let's proceed here. Now price respected this fair value gap here upon confirmation that it was bearish. So everything that we're going to be doing from here would have been what? Easy. Would have been what? A bearish call. So everything we're going to be doing to bearish call until proven otherwise. So we have 1 break here, 2nd break. So everything we're going to be looking at here is what? A bullish move from here. So if we took a bullish move from fair value gap here, would have taken a loss. That's what I want to show you, the reality of backtesting and executing it also. So you would have taken a loss, and this was like on the Thursday. So price change the structure, gives us a confirmation, taps into an OB. So 1 2 taps into this OB here. This will obviously be a very swing trade that you're going to hold for a long time. Maybe you hold it to like this high here, like the high. So you have, wait, so I usually used to tell you that you take a profit in the 2nd swing point. So you have 1, you have 2. So it might be like a 2R or a 3R, respective of whatever you're doing. So price taps into the other block here, and then boom, it goes. Alright, when it gives the second confirmation, sorry, when it gives this here and this here, maybe we're trying to sell. Let's see, we're trying to sell from here. We get stopped out, hit stop loss, and when it's confirmed that okay, we're now buying, right, you come here, you see the respect of this fair value gap. This is the point. So you have the first break here, you have the second break here. As price was pulling back, you have the first break, price came down, respected fair value gap. We don't need it. We need when it confirmed. Second break, price came back, respected the OB that is here, and up it goes, before eventually shifting to the downside here. So first, second, maybe second here, looking for sales from above here. If you try looking for sales from above here, you hit stop loss. You should not be right all the time now. You hit stop loss. But from here now, 1 2, right, given that there's a confirmation now, you now know okay, this direction wants to go. You use BBA, price goes up from there, right? Same way, liquidity sweep. Obviously there's an OB in this list here, price continues from there. So you keep on going and going and going. Let me say, I want to check if there's a question. Okay, no question. So you keep on going and going and going from there. Every time there's a confirmation as to where price is going to, there will be a OB to push. There will be a PDRA, a POI that is going to push price in continuation to that level. Every time, right? There will always be one every time. So this is a shift here, this one is a shift, 1 2. There will be a confirmation that will push price all the way to that level. This is another one here, 1 2. It's confirmed that it is now going up, right? There will be a POI to push price. This is an OB now, so this is another block. It's push price to tell you that okay, now it's time to hold price to the other side every time. So 1 2 did not happen, but 1 2, and so we're going to be waiting for price to, mitigate, but it didn't. Why is this one bending like this? So we have first break, second break here. This one should come back to OBs. All these ones are OB here. For starting from here is a rejection block. Oh damn it. So starting from here is a rejection block that price rejected from here. downwards. Mind you, you see what we're targeting at? We're targeting the levels where price flipped, and not just the flip alone, because if I should go into it and check every OBs, and we might not finish, and I'm already running out of breath. So you have this rejection here, price rejected, it's weighing down. Okay, we're going to check, okay, is there a present shift in the market? You have 1 2, so maybe you try to sell from here, this rejection block, you try to sell from here, you hit a stop loss. You cannot be right all the time. So now you have 1 confirmed, 2, so anything you're going to do now, it will be confirmed here. So see, price rejected an OB and then it flew away. So 1 2 to sell. When it gives us a sell here, maybe you try selling again from, maybe you try selling from here, right? You hit a stop loss, but since it's now confirmed here, 1 2, if I tried buying, if I was the one, I would have tried buying from here, so I would have a missed trade. I would have had a missed trade. So it's not that I'm going to show you this one goes on scatter. So it's not that I'm just going to show you, okay, this is how it is, it's so easy, it's so this, it's so that. That's a lie. Really better show you like that. The person just whine you. The person is whining you. So I've showed you how many times you hit CP, and how many times you rejected a POI, valid and held. I've showed you how many times you hit a POI and it failed. I've showed you missed trade. So this is a missed trade, because there's no way I'm going to be catching the trade here. Me, I know myself, no, I will take a trade in an extreme level here. So although the trend continues, right, but that trade I would have missed it, but this one I would have not missed this one. So this is the move I would have missed. When price I would have missed this one. When price came here, I would have missed it. But you see, this one I wouldn't have missed it, because this is a break in structure. This is the origin of the break. People that know me for long know what this one is called. So this one is a POI, right? This is your normal classic SBI now. So you take a trade from me, you hold the buy. So I know that I would have not missed this one, but this one definitely would have missed it. And so price, you buy from here, you hold your trade, whatever, I don't know how long you hold your trade. So price flips, it breaks this one for the first time, then it goes up, it flips here 1, before flipping again here 1, and then flipping here again 2. So meaning I'm looking forward to selling, right? There's a fair value gap here, I even like as this one is giving me real-time example. If I take a sell from here, I would not hit CP, meaning this one will close at what? Break even. So it's even showing you, it's encapsulating all the activities that happen even when we're trading: the missed trade, the take profit, the stop loss, the break evens, everything is encapsulated. It encapsulates all. So you hit stop loss here after it was in profit, and then it goes up. You're not angry, or more, but you're patient, you're calm to wait for confirmations. You have this first confirmation, second confirmation, and then price continues going up. In this case, me, I would have been waiting for price to like reverse to other block here, but it did not. So going up until it goes here. So first break, second break. So you see this now: first break, second break, reverse back into OB here, and hold the sell from here. I usually stake my profit in second swing points. So this would have been my first swing point, this would have been my second swing point here. So first swing point is 1, second swing point is 2. If I had a sell from here, I'll take my profit here. Do you get? And then until it flipped again, so you have 1 flip, 2 flip. So you just go like that on and on and on and on and on. You continue like that till you get to where we are presently. So you get to where we are presently, and then you see it. So what have you been able to, what is it that you'll be able to achieve with the 2 break of structures that I'm talking about? Is simple. Number 1 is it helps you to identify the trend easily. You just look at the chart and you know, okay, this is the direction that price is going to. Let's take an example, and the last example, XAUUSD. This is XAUUSD, right? I'll turn off this fair value gap, so turn them off. So this is XAUUSD, right? If you look at it now, this is where price is at the moment. So pay attention to this. You have the first break here. So you might not be seeing the second break yet. Or no, that is not even the first one. I'm seeing it here. So you have the first one here, where price initially failed to break the structure to the for the downside, then going up to break structure against the upside. So now we now know that it's bullish, right? Everything that we're doing, everything we're looking for will be to buy. An example of a buy will be here, a liquidity sweep coupled with what? This is just a classic buy model now, very classic. Price goes up, a break of structure, the origin of the break. This is the break of structure here, the origin of the break, and the mitigation and everyone will be here, and you hold your buy. So maybe you took a buy from here, you hold your buys till maybe you get to the high, which is there, until proven otherwise. Use that word until proven otherwise, because price can then flip before you know what is going on. It flips on you. So this becomes very easy to read anything you want to read. This is Bitcoin. From here you see this break, you see this second break here. What do you think we're going to be looking forward to? You're looking forward to what? To sell, because now you have this one, but you don't have this second break to the upside. So this is what you have, 1, 2. So anything you're looking forward to now is to sell. It might be there is a short sell, the price might just continue going up, but for now it is to sell. It is to what? To sell. This way your structure, your liquidity, oh my god, and everything you trade becomes very easy. I don't know when we started this session. 9:45. So I'm sorry, 7:45. 8:45 is 1 hour. 9:45 will be like 2 hours. So we've been here for like almost 2 hours now, and I'm out of breath. The main reason why I'm out of breath is not because of the talking, it's because of the backtesting. So we backtested the whole year data on EURUSD from January 2025 to January 2026. Yo, great. Back to where we were. To wrap this up, this is where we were. So to tell you that understanding structure does not need to be hard. I read through so many people's comments, and I told you guys to make send a comment. I'm going to read them and then put them together to teach you for this Saturday session, and that's why I'm hosting this session now. Alright, so all the sessions, what we've just discussed is the market structure. We have an uptrend, we have downtrend, we have ranging markets, and the substructures we have is structure shifts and then the change of character. But what you can use to confirm all of this that encapsulate everything is that two-breaker structure. The two-breaker structure, once you have two-breaker structure, it tells you the direction of the market at that moment, at that time. 1, 2. Anything you want to do, if it's a liquidity sweep you want to trade there, fine. If it's just support and resistance you want to trade there, fine. But as long as you're seeing two-breaker structures in line with a particular direction, that is the trend. Let me show you this DXY. This is DXY. Okay, you have this break, you have this break. What do you think is happening again? That is it. It continues to go up from there. In fact, okay, you trade liquidity sweep. This was a liquidity sweep here, so it's up this liquidity here now, right? And then it continues to go up from there. That is it. Pick any instrument. I don't take my word for it though. I dare you to pick any instrument Try it out, and then use it to identify your directional bias. Then you know the entry model you use, that exactly that entry model that you use, then encapsulate it, put it into it. You would see that the losses that you used to take, they will just reduce drastically. They will reduce crazily, like drastically. Why? Because you are now taking trades that are in line with the present trend. Emphasis on the present trend, because most of you, what you used to do is you used to hold the sentiment in your mind, and so within that thing won't do, that's what is in your mind, that's what you'll be expecting it to do. If it doesn't do it, you'll now have peace. She gets, no, you will not. So pick a pair, maybe the pair you used to trade, pick it, use this to break a structure on it. Or the way I've probably told you to annotate price, if you're annotating a change of character, it should be a failed break. If you're annotating a market structure shift, it should be that you're waiting for a second break. Right? If you're trying to identify the trend, uptrend, downtrend, it should be that you're waiting for two break of structure in a particular direction. Two break of structure in an upward direction is uptrend, two break of structures in a downward direction is downtrend. And when these break of structures, then the last tip is when these break of structures, where you notice that a broke structure up, a broke structure down, a broke structure up, a broke structure down, and it's doing it on and on and on and on, then you then know that okay, no, this one is a ranging market. Do you get? Then you know, okay, that one is a ranging. It's as simple as that. It's a ranging market. And it's not just on currency. I say anything that has a chart. So let's say you want to use Nasdaq. So you want to use Nasdaq, yeah? So you look at Nasdaq now. This is 2 hours. Alright. So this is 2 hour time frame. So you have this break 1, this break 2. What did I tell you should focus on? Focus on sales. So if you are the one that has to trade liquidity sweep, price came up, swap liquidity, take your trade, hold your trade, and you are done. If it's a sell, if it sells, fine. If it doesn't sell, fine, you move on to the next one. Life is hard, it's simple. This one now, a broke structure here 1, a broke structure here 2. If you trade liquidity sweep, maybe you trade like this, and then probably there's a POI or whatever in this level. There's no fair value, there's no POI. I want to look for a POI. Hold on. Okay. When I see something like this, I know this is the 2 POI principle. So if I've marked out a rejection block like this to cover this, right? But I'll put in mind that price has already made another break of structure downwards. So if I was buying and I'm in the buy, I will leave the buy alone. Even though it went up, I'll leave it, because now price has broken structure first time and broken structure for the second time. So it will just continue to buy now. So any charts you want to use that on, any one at all, you can use it on it. It's going to work as long as it has candles, and as long as you can see it on the chart, it will work. And so since I'm not seeing any questions, right, I'm going to end this session now. Hey, for I cannot breathe again. I've lost my breath. Which message is this? So yeah, on Monday we are going to continue our normal session. So today we dealt with market structure, right? Tomorrow I'll just deal with POIs, where we will then talk about different type of POIs that we use and how you should use them, why they are valid, why they are not valid, what makes them more stronger, what makes them weaker. We'll deal with them tomorrow. We'll talk about the other blocks, the breaker blocks, the mitigation block, fair value gaps, IFVG, the inverse fair value gaps, support and resistance. Anyone that you trade, we'll talk about it. As long as it's a POI, we'll talk about it tomorrow. That'll be for tomorrow's session. It's in the evening, obviously. Tomorrow evening session. Is it not the go church? Except you know the go church, maybe you be devil. But that'll be tomorrow evening session, right? You get so. Then we'll talk about POIs. Then on Monday we'll continue with our normal market analysis. Okay. So since there are no questions and anything, we're gonna end the session now. So take care of yourself. And the last thing I'll tell you is, whatever you did, the rubbish that you did, me say I did many rubbish this week. Check out the nonsense that you did this week. Review. If you did not journal, start journal. It's bad habits if you're not journaling your trades. So whatever you did, whatever you traded this week, go back, check them. Why did you take those losses? Check them. Why did you take those profits? Note them down. That way you're refreshing yourself, you're refreshing your mind. It's not like you don't know them, you know, but you're refreshing your mind, you're refreshing yourself to keep yourself always active and sharp. You know, when you want to use a cutlass or an axe to cut down a tree, if the axe is not sharp, you waste time, whereby you even injure your hand, you have blisters in your hand and all. But if you take time to be sharpening the axe, the moment it's time to walk, and they say everybody are now gonna start cutting down that tree, you that have been taking so many times to be sharpening your axe, you're not going to waste time. You will not have blisters in your hand. You cut the tree down easily. The same way, when you journal, when you study, when you do the needful and things that you need to do, right? When it's time to trade, you might find few things hard, but not as hard as the one that did not do any of those things. Why? Because you prepared your mind and you are ready for the market. You are ready for yourself in the market. No, you're not. You cannot even really be ready for the market. You are ready for yourself in the market. You're ready to manage your emotions. You're ready to manage those frustrations. You're ready to manage everything. You miss a trade, you're ready to manage it. You saw a trade and the trade is, you are ready to manage everything. Is yourself. You're trying to manage your own self. You get. If you need to watch a video today by any of your mentors that you admire, maybe it's Techris, maybe it's Polarity, I don't know, there are a lot. Fairy trades, charts, big charts, plenty of them. Scofield, Fortman, FZ, Kevin Talent, Dax, anyone you want to watch. If you have videos that you want to watch, make sure you go and watch them. Make sure you watch it. Don't be putting things in bookmark. I mean, some of you have bookmark. You already bookmark your life. You've kept it for later. So if you've bookmarked a lot of things, today go and revisit them and then watch it. If you need to add it to your strategy, go and revisit it and then use it. I hope and I wish you the best though. So take care of yourself.